Hello, everyone, and welcome to this episode of Coffee with Carl. My name is Carl Zoellner, I'm one of the attorneys with Anderson Business Advisors. And today we're going to talk a little bit more about Social Security. The other piece, just as a reminder to everyone, please remember to like and subscribe if you have not already, and also share with a friend. As you do these things, it incentivizes us as well to continue to make and give you out all this free content. So without further ado, let's get to our coffee and our subject of the day, which is Social Security and when it becomes taxable. So it's going to look a lot like basically your same, not same, but there's tax brackets just like when we earn prior to taking Social Security. I'm going to look at the married filing jointly because that's the most common clients I come across, and probably most of you fall in that category as well. However, there are individual tax brackets as well if you wanted to look those up on your own. But yeah, married filing jointly, let's just take a look. If you earn under $32,000, there is no tax on your Social Security. So that gives you kind of a nice little buffer there. And then also, so if you do go above that 32,000, so between 32 and 44,000, it says up to 50% of your Social Security may be taxable. And then anything over 44,000, up to 85% of your Social Security may be taxable. So this is one of those scenarios, and you'll hear me probably say this in future videos as well, where you sort of ask the calculator what makes sense for you, what makes sense for your family, if you need to add some additional investments in order to get you sort of over the hump. But yeah, ultimately you would figure out what your Social Security payment would be. There's even a calculator that estimates that for you on the ssa.gov. If you just type in basically Social Security quick calculator, it'll pop it up and you can actually start plugging in numbers and figuring out what that's going to be for your long-term goals. And then ultimately, like I say, sort of ask the calculator what that looks like to have your Social Security income taxed. And if you can out earn that and it becomes a non-issue, then good for you. If you need to sort of modify your plans, then it's better to do that ahead of time, of course, than it is once you're sort of in the individual mix and then run into issues down the road. So yeah, ultimately, when does your Social Security become taxable? It depends, but there's very clear guidelines on the Social Security website, as well as you can certainly look up as well those tax brackets I mentioned for married filing jointly. And then, like I said, there's also, of course, the individual tax brackets as well that sort of run fairly close to about half of the married filing jointly ones, which makes sense, right? Because one person versus two people. So yeah, that's ultimately number two, is how you figure out what your sort of taxable income would be if you're willing to run the numbers. And then, yeah, like I said, basically you ask the calculator to give you advice on this one. If it makes sense to up your investments so you have a little bit more comfort level, which most people I think would, because I don't think Social Security is going to be paying you that much, if it's even still around, depending on how old you are watching this video. And then ultimately, yeah, ask the calculator what you need to do to adjust. I think most people probably still want to have more to live off of than an additional $34,000 a year on top of their Social Security. So just kind of figure that in from a tax perspective and this, by the way, maybe it's a key here as well, but your Social Security becomes taxable. And then ultimately you still have your ordinary other income from those other investments. So it may still be worth, like I said, at some point that sort of rolls over on when that becomes worth it to over earn your Social Security, because at some point it's capped to it looks like right around 85% if I'm looking at the tax brackets. So ultimately you can certainly overcome that with investments, and it sort of becomes just a little icing on the cake that you end up paying tax on. It's not 80 and it's not 85% tax. It's on the 85% of the Social Security income becomes taxed, which usually in retirement, hopefully most of us will be at a lower tax bracket than we are currently. Or if you're way above, that's great news too, because like I said, ultimately you sort of out earn the issue because ultimately, like I said, if you sort of ask the calculator will tell you that you are above and beyond the 85% that you're being taxed on at this point. So yeah, if that number would have cost you maybe, I don't know, 10,000 out of your overall earnings because of your Social Security becoming taxable, you over earn that, then all of a sudden it's not that big of a deal. So for this episode, thank you all for joining me. I will catch you on the next one.